What is up everybody, my name is Gifford and welcome to another stock market video. If this is your first time here, this is my weekly video where I document what I'm doing on the New Zealand and the US stock market. As a beginner, I'm going to show you what I'm doing, my profits and loss this week. Hit that thumbs up and let's have a look at what my portfolio looks like this week. Having a look at my total, it's at $6,363. I am still in a negative return by 1.4%, and we can see here I have $4,636 in my ETFs and $1,727 between my Hatch and my Sharesies account. So having a look at over my Sharesies, I've got $577. If we have a look at this week's gain, so I'm up this week, so a bit better than last week, so I'm up by 2.49%. If we scroll down, I'm not going to go into these companies that I bought this week, but I bought Contact Energy, EBOS Group and Oceania, as well as putting small amounts into my restaurant brands, Ryman Healthcare and Somerset. Now going over to, so in Hatch, my current portfolio value is $776 US, and I'm down by about 3.11%. So we scroll through here, I have 7 holdings. Now I'm looking to actually reduce that, and I have no ETFs in this one, it's just 100% companies, because this is what I use to invest in the US market. So I haven't really spoken about my Hatch account, so let me go over the companies that I've invested in. So the first one is Walt Disney, and we can see on this line here the average cost that I bought in. Second one is Facebook. The next one after that is Illumina, Spirit Airlines, Turtle Beach Corporation, MGM Resorts, and Provident Financial Services. So overall, I am down by 0.4% actually. I'm not sure why it's different from there. So as you can see, my best performer here is Turtle Beach Corporation, which is ticker symbol HEAR, and that's up by 28%. I've got $82 in there, and the next one is Walt Disney, so that's up by 17%. So my worst performer is MGM, which is 17.52%, and Spirit Airlines at 13.67%. So also while we're here, I just want to point out Hatch has a buying fee of $3 US. What I really should be aiming for is buying 100 US dollars of stock, so that at least my $3 is 3%. You don't really want to be higher than 3%, but because I'm starting, I'm just kind of buying these different lot of stocks that I think are of value and just seeing how it goes. Going more into the future, what I'll be doing is actually waiting till I have a bigger sum of money, maybe $200 to $300 US, and then buying a big lot of stocks, so then the fees are a lot lower. So I've got 1, 2, 3, 4, 5, 6, 7. So that's 7 times 3 is $21 just in fees alone. So what I should really be doing is that buying bigger chunks. Now I'm pretty happy this week because I actually saved $300, which was pretty difficult to do. 300 New Zealand dollars to invest in stocks, but I haven't actually spent much of it. So as well as trying to focus on buying good quality stocks, I always focus really hard on trying to save money so that I have more money to spend every week on stocks. Typically I only save about $100 to $150, so 300 is a really good week for me. It took a lot of effort, so I want to make sure that I'm buying good quality stocks with that. So I've been watching a bit of YouTube videos this week and see what other people are doing in the stock market, and there is a lot of discussion about when the next crash will be. People are saying there's a lot of stocks overvalued, and when I'm looking, there are a lot of stocks. I don't see many good deals around at the moment. Sometimes where the market is overvalued, what I'm going to keep doing is just putting more money into my ETFs unless one of the companies I like stands out. And if we go over here, we can see my watch list. So these are the bunch of companies that I'm keeping an eye on at the moment. So one of the big news in the last couple of weeks is Tesla hitting 1,000, which is pretty good for a car manufacturer. I personally don't have any stocks in Tesla, and I wish I did. I had the opportunity, if I did have my accounts, to get it at 700, but at that time I was actually waiting to get access to my accounts. I really want to start a position in it. I think it's too expensive at 1,000. If Tesla was to go down and hit around about 800, I would definitely get some stocks in it. I'd probably only be able to afford a fractional share, but I'd love to get a position in Tesla. It's just, no, that's enough of that. I don't want to talk about it. So let's just have a quick look at Tesla on Simply Wall Street. Let's have a look at its valuation. So at the moment they think it's overvalued. They think the price should be $691 US and its current price of $981. If we look at its financial health, we can see that Tesla has a lot of money there. So there's no worries about it running out anytime soon. Now if we just go to Yahoo Finance, its valuation, and we see a very high forward PE of 300. So I typically go around about 20, but Tesla is a growth stock. Who knows? There's just, if you look on YouTube, there's just everyone's thinking it's just going to keep going and going. So again, I don't want to go into the FOMO of it, but I just think it is going to carry on going. Everyone likes the products, everyone knows about the car, everyone knows about the stock, and it's just something I really want to put some money into. The next stock I want to talk about is the Hertz, and Hertz filing for bankruptcy, and this just is crazy to me. So we can see from this news article that Hertz, car rental giant Hertz, files for bankruptcy, Chapter 11. This was on Saturday, May the 23rd. The stock was hit pretty hard anyway. It's already down by about 80% in here, but if we go through here, when they filed for bankruptcy around about this time, you can just see it literally drops to 56 cents. Now, what does a Chapter 11 bankruptcy mean? So let's have a look at this. So Chapter 11 is a form of bankruptcy that involves a reorganization of the debitor's business affairs, debts, and assets, and for that reason is known as reorganization bankruptcy, named after the US Bankruptcy Code 11. Corporations generally file Chapter 11 if they require time to restructure their debt. So what I'm reading online is that everyone reckons there's a lot of new investors investing in Hertz, and I have seen some of the data, especially they talk about the Robinhood users jumping on Hertz, and this just seems crazy, absolutely crazy for a company that's going bankrupt and people are just piling money into them. This is definitely not my approach of what I think is value investing. It seems like a good pump and dump, but it's too dangerous for me. I value my money too much to be able to do this. But if we have a look at the stock, absolutely tanked, and as we can see here and go to its high, it went up 887%, and then after that decided to fall back down, so as people were dumping the value. So I don't know why you'd invest in bankrupt companies, but it seems to be the trend. There's other companies going up there and people are just buying into it. So I've never seen anything like this. This is just not normal. So anyway, I'm going to be staying away from this stock. Moving on. So another stock that's been getting a lot of YouTube airplay is NIKOLA. So ticker symbol NKLA. So we can see here, they started out with a merger and then they had a massive growth and then dumps back down to $62. So we can see a lot of videos here discussing whether to buy the stock or not. Personally, I'm not going to touch it. They don't have a product. They don't have any factories. So quickly going into Simply Wall Street for a quick check. They don't have a lot of information about them, but they do have a market cap of $22 billion. Now, I don't think that's warranted when they don't actually have any factories. If we go to the valuation, no, they don't have a valuation for that either because it is new. They do think that it's going to grow by 54%. So just looking into this week, I think the market is quite overvalued. There's nothing really that I want to buy. I do have some money in my account, but I'm just going to hold off for a minute. Now, if I was going to buy something this week, I'm probably going to look at MGM. So if we can see here that the average cost that I've bought them for at the moment is $23.46, and the current price, they've dropped down even further by 17% to $19.34. I've only got 4 stocks in them. So in Simply Wall Street, if we have a look at the summary, they're trading at 61.6% below their value, or what they think is their value. Their earnings are forecasted to grow 18.3% in the next year. Their earnings grew by 1,000 over the past year. So Simply Wall Street has them undervalued at 61%, so their fair value is $50, but just remembering it's probably hasn't gone up to $50 ever. So we're looking through here, and yes, we can see here that the highest it's ever been is $34. So in my eyes, this is still undervalued. If we can see the drop, they haven't recovered, and what's going on with the US at the moment. So so this part here was due to flu 19, and then probably coming out of lockdown, they've got some riots and there's not a lot of activity happening, but so this stock I see is quite undervalued still. We're going to get it a bit of a discount. Let me just have a quick look at Yahoo Finance. So the 52-week range was $5.90 to $34. So we are still getting a bit of a discount at the moment. Even they consider it's undervalued, but that's just only an indicator. They have $9.5 billion in market cap, and having a look at here, their PE ratio is right down at 3.53. So let's go to the valuation. So having a look at their forward PE value at 21.98. So that looks very good. So they are going to see an increase in that. So I may just keep an eye on that. And if there was anything I was going to buy, I would probably buy these guys here. So the other thing to note as well is their price to book value. And let's just have a look at Simply Wall Street again. And we can see here the PEG is good, and also their price to book value is very good as well. This is going to be a stock I am going to consider buying. So just looking at my watch list, that I do want to open up positions in the FANG stock. I know the market is quite overvalued, but those stocks just keep going up and up, so I'm going to monitor that situation very nicely. So Facebook is the only FANG stock I got at the moment, so I definitely want to open positions in the other one. Well, that's enough for me this week. Thanks for watching. Comment down below if there's any stocks that you're buying. Smash that thumbs up button, subscribe if you want to. Otherwise, see you next week for another video. Goodbye.